Hey folks, Dan Frio here with your update for today, and today we're going to talk about what in the world is going on with these things over through here. So my apologies, folks. I just got off a conference call, and I want to explain to you guys what's going on with rates, because I went away last week, and all of a sudden everything just went crazy. So in today's video, we want to talk about just kind of what's going on with these things and the whys. Here's what's going on right now. Some breaking news. I don't know why this isn't going in my whole screen, but that's okay. We'll have that down through there. Live update right now. Iran just retaliated against the U.S. I want to explain to you guys what's going on, what should happen based on this information. Let's go to the Israeli bond market. And this is things that I do behind the scenes to help you guys manage these things over here. So believe it or not, as Israel has a bond market, and here's what we're seeing right now, the bond markets are tumbling, and that's normally what happens to bond markets when we have retaliation and wars and strikes like this going on. Go over to here. Our bond markets are doing pretty darn good as well. The 30-year fixed, well, let's go to refresh that. The 30-year fixed on the MBS market. Mortgage rates right now, they're rallying up 17 ticks. The 10-year Treasury at the U.S., and we're going to see that as well. That is down 4 ticks to 4.33. They thought this was going to hit 5% recently, folks. So that's a shock and all right there. We go to the Tel Aviv, their stock market in Israel. It just closed at an all-time high. It's a head scratcher. You just come over to here, and our market's up 355 points. And why? Because we have Israel. Think of it this way. We bombed Iran's nuclear facilities or enrichment facilities. And then I thought, honestly, that was going to be the end of it. And now they're retaliating. So I'm thinking, okay, when that hit, I started really dissecting the markets, the stock market. Look at it. The Dow Jones is still rallying and might be up 400 points here soon. And some of the news that we're seeing coming in now is also some Fed officials are starting to move over to the Trump camp. So they're talking, there's not one, not two, but just 3 out today saying that there should be rate cuts in July of this month. So let's get over it, folks. Let me kind of explain why I did this special report to help you guys understand these things today. So I'm getting a lot of feedback from people right now saying, Dan, what should we do with our rate locks? Should we lock them in? You know, rates are probably going to plummet from here, because normally in a normal market, when you see retaliations from Iran, the first thing you would think of is, oh man, the stock market's going to get pounded because of all the uncertainties, and you're going to see people moving into safe havens, which is usually the bond market. Well, we're not seeing that today. Well, maybe a little bit, but we're not really seeing that today because we're seeing the bond market kind of coming down nicely, and the markets are just reacting weirdly. So again, the recap of this, what I do is I don't just look at the U.S. I also look at a whole bunch of other elements, because I want to figure out what our economy is doing and what the Federal Reserve most likely is going to do. So over the past month or so, I've been saying I'm on the side of the Federal Reserve, and when it comes to cutting rates. We saw a lot of data that's coming in over the last month or so, actually on point. I'm going to go over those in a second with you. We're going to look at inflation, the PCE. Now, the PCE is the number one inflation figure that the Federal Reserve monitors. That number, a new number, is coming in this week. We also have GDP coming in this week, but you can throw all those aside because we need to really focus in on right here. How far is this going to escalate? So right through here, you're seeing the Dow Jones rises 350 points Monday as oil slides on Iran's retaliation of the U.S. attacks. So you sit here and you say, okay, they just bombed us, and you're seeing right through here, Iran retaliates. So why would oil retract, and why would the market say, oh, this is kind of okay? I can't get it. So I wanted to do a live report to help ask you guys out there, is there anybody out there in the financial markets or the bond markets or even traders out there that watch my channel that might be here today with us that might be able to throw some input in there? Because, again, normally what you see is you see people fleeing to safety. So I did focus in on the bond market over in Israel over the weekend and the stock market, and they just kept rallying. And I'm sitting here thinking, okay, you're bombing Iran. Now you have the U.S. involved, and the markets are kind of calm right now. So it's a head scratcher. But we do have some reports coming in right now. We have Goolsbee. He sits on the Federal Reserve. We also have 2 other members that just came out over the weekend, both saying, or all 3 saying at this point, well, tariffs really haven't had much of an effect at anything at this point. We don't think they're going to be as retaliatory as the Trump administration once kind of laid out there. So that data is starting to come in really nicely right now. So now we have three Fed officials coming in telling us there is a good opportunity to cut rates in July. So what I thought I would do is just give you some of the good headlines that we have today. So those out there waiting for home prices to crash in your area, will focus in on your area, because overall you have home sales ticking up and you still have home prices hitting yet another record high. So this news just came in today. You can see that June 23rd at 10 a.m. in the morning. What it was saying right through here is home sales increased slightly. That's the sales number, how many units have sold. Okay, so now what we're seeing also is the prices starting to stagnate, but they're still up 1.3% from last year. So the markets are still okay, but you have to really focus in on the area that you're looking to buy, because if you're in like the west coast of Florida, you're probably getting hit there. If you're in the Austin area, parts of Arizona, parts of California, a lot of areas are really getting affected because of rates, because of insurances, home prices, just like this, and just lots of other things. So that's what we're seeing right through on the markets and the headlines. Also taking houses a little bit longer to sell, but we do need inventory to stabilize prices. Okay, so that's what you've basically seen over the last couple of years. So now we go over to oil. Oil ratcheted up. Now, why do I talk about oil a lot? I guess I say I probably talk about it every day in my analytics when I go through all the numbers with you. We look at, how the bond market fared, how the stock market did, and I always focus, or normally try to help you focus, on oil. The reason why I focus in on oil is it is wildly volatile, as we're seeing right now, and it is inflationary. Okay, so when you start seeing oil coming in through here, let's go over to see if we got oil prices on the map. I'm going to go over the dot plot for you in a second. But oil prices, we can go over to the CMB stock exchange, and let's grab the oil prices that we're seeing right through here. The VIX is also coming down. It's below 20. That's still another head scratcher. But let's get over to oil. Oil's down $5 a barrel. So now it's starting to plummet again. Let's see where this took us. And I want to explain again the whys behind all this with you, because oil, if you see oil ratcheting up above $65 a barrel, it's going to start hitting the inflation numbers. So here's what we saw. This is just the other day. We basically went from $75 a barrel. That shocked the market. And then a lot of people are sitting there scratching their heads saying, okay, if oil prices go up that high, think of the overflow effect. How is the stuff that we buy produced? Well, a lot of it's still using manufacturing, vehicles that are powered by diesel and gas. So they produce it that way. They ship it that way. We go to the stores to buy it with using oil and gasoline. So this, if you see oil prices hitting $75, $80, $100 a barrel, all bets off about the Federal Reserve cutting rates. So we need oil to retract. That'll bring down the pressures on the inflation front. That'll help quite a bit on that front of it. And then again, we also have a lot of Fed officials coming in telling us they're going to cut rates, or they're at least proposing being on the side of rate cuts on the July meeting. So let's get over to the last piece of the puzzle that we focused in on last week, was right through here. It was the dot plot. So a unique thing that came out last week from the Federal Reserve. Not only did the Federal Reserve come out and tell us, well, what they were going to do, and we knew what they were going to do, they provided us with a new dot plot. And the headlines all over the place were Fed still signaling 2 rate cuts. So if you watched my video last week, and my apologies, I left on Wednesday evening. I went back to West Virginia to see my mother, and she's doing pretty darn good, folks. She does have dementia, but she recognizes me, and that was good. And I got to spend the morning with her. Yesterday was my 60th birthday, so that was kind of really cool. My father passed away a couple years ago, so I was able to spend my birthday with my mom and get to visit her as well. But what you're seeing on the board right here, this is called the dot plot. Okay, so what happens when members of the Federal Reserve get together? Every 6 weeks they get together and they tell us exactly what they're going to do with interest rates. But 4 times a year they come out and they tell us what their proposals are for rates over the next couple years. And it's called the dot plot. So what happens is, it's right on the screen here. So what happens is Federal Reserve officials, they come in and they put a dot where they expect the federal funds rate. So let's get over that. Here's the federal funds rate. It's 4.25 to 4.5. There's a spread there. I don't know why it does that, but there's a spread there. And the Federal Reserve monitors PCE inflation. They monitor the employment numbers, employment and the GDP. They were created to keep these all in check. Basically, they had two mandates: one, to keep prices in check, which is inflation, and to keep the jobs market at full employment. So that's what they're working on right now. So this is what they're looking at. But let's get over to the dot plot that they just put in. The previous dot plot that they had had everybody voted right here. This line right up through here. This is 4.25 to 4.5. Okay, that's where we're at right now. But now what the Fed officials came in and they said, okay, well now there looks like there's 2 rate cuts. But if you look at this, I wouldn't say there's a consensus vote for rate cuts. If you go over to this, you got 1, 2, 3, 4, 5, 6, 7 officials basically saying they're not going to do anything because we're at 4.25 to 4.5 on the rates right now. That's the federal funds rate. Okay. But there's 2 that says, oh, they're maybe cut to 4 to 4.25, but now there's 8. 1, 2, 3, 4, 5, 6, 7, 8. So 8 says, well, the rate might be 3.75 to 4. But again, remember, 8 says this, 7 says this. So I don't really know there's a consensus vote here on the dot plot to cut, but we do have one more member saying that they're cutting than the rest. But this would be more of a stickler if basically nobody said that there was going to cut. So you could see down through here where people are saying they're cutting. Now, everything else is off the table. Usually you have blips like this. You have a dot up here and a dot down here and everything else. Basically, these are all condensed right through here. So if there is going to be any, it's going to be modest rate cuts coming in the future. But what they're going to focus in on, again, is right through here. So the PCE updated numbers coming in this week. So if we go over to the economic calendar, I don't think I pulled that up. So let's go over to this week, because if you're watching this, you might be sitting there saying, I'd love to refinance. When's that opportunity come up? And I'd also like to buy that first house, but I'm just contemplating when I should lock in. So that's what we're trying to figure out. So this week, let's look at the economic data. So I go to the Bloomberg. Somebody actually mentioned a comment down below that they don't trust the Bloomberg calendar. Folks, it's a calendar, okay? So let's clear this out. I'm going to go down through here. I just want the U.S. data. I want all the categories here, and then I'm just going to pick the top, the 3-star category down through here because I don't want just tons of data. So here's the information we're getting out this week. So far this week, we had manufacturing numbers, and I did this in my opening bell, but I want to show you how the stuff isn't falling off a cliff. Okay, we keep hearing every day that tariffs are going to be, it's going to be the ruination of our country. Then that tax bill, it's only helping the wealthy and all this other stuff. But the data here looks pretty okay right now. We have manufacturing. Manufacturing number came in last time at 52. Anything above 50 is still progressive. Thought it would come in at 51. It actually came back down in at 52. And then you have the servicing number, came in at 53.7 last time, expected to drop below 53, but it came in above 53. So this was fantastic news. And then the existing home sales, still 4 million are on track to sell for the year. So still not a bad number there. Tomorrow we're really not going to get anything, but Federal Chairman Powell will testify. We're going to see how that goes because usually that can be market movers. And then new home sales come out on Wednesday, but then here's where that data starts to come in that we'll focus in on. Durable goods orders. Last reading was negative 6.3. Basically means nobody's buying durable goods. So did people front load this in anticipation of those tariffs hitting maybe at 25%, so you're trying to save yourself money? That's one way I would take it because these numbers, the automotive numbers kind of blew out the numbers. So that's what we're seeing there. Now here's that GDP we talked about. The last reading came in a negative 0.2. So here's another piece where I sit here and say, okay, they're anticipating this being up about 1.9. Some analysts have it over 3% for the year, the GDP. So I don't know how we're going to get there if we continue to have quarter after quarter at negative numbers. So I'm not sure that this number is going to be negative this time around. Well, Thursday we'll find out that. Then initial jobless claims are going to come in on Thursday as well, unless this just deteriorates down to initial jobless. Well, I'm sorry, skyrockets like 4, 5, 600,000. But I'm thinking the numbers should be stagnant here. So that's telling us, okay, the economy so far isn't so bad. And now we're getting to that PCE. We're going to get month over month and year over year. So the month over month was 0.1. They're expecting to go to 0.1 or stay at 0.1, and the PCE year over year is at 2.5. They didn't give us any expectations of that, but because no tariffs, or a lot of the tariffs haven't truly been built in yet, because most nations don't even know that number yet, this number might be a little bit lower than expected. And if that happens, that'll be completely good news for all the markets. But right now, the biggest dilemma we have is right through here. So that's what we're focusing in on today, or that's what I wanted to bring out to you guys. The market, yes, Iran retaliated against the U.S., but I thought the markets would do a lot different than what they're doing, because what we're seeing right now is the bond market's doing pretty darn good. It's holding up into the positive levels. You still have the 10-year Treasury down 3 ticks. And then over here, when we look at the MBS market, you have mortgage-backed securities up 16 ticks. Now, if you're new to my channel, we focus in on the MBS market because this is a mortgage bond that's rate is actually the biggest component of your mortgage rate. Okay, so what happens, how we figure out more interest rates for mortgages, we take the yield on the 10-year or the MBS, we add in what's called loan level price adjustments, and those are things like what's your credit score. So if you have a lower credit score, you're going to get a bigger hit, and your rate's going to be a little bit higher. That's what we call loan level price adjustments. It could be your credit score, it could be the type of loan you're looking at, it could be several different things in there that would affect your end rate. So right now the bond market or the MBS is up to 16 ticks. That means mortgage rates are coming down. So when you're following this is the price of the bond. So all you have to understand when you're watching mortgage bonds or any bond, if the price goes up, yields, and in this case it's a mortgage, it'll come down. So that's what we're seeing there. But like I said, Tel Aviv, their stock market is doing fantastic. Their bond market is cracking right now. You have the Israeli, you can see right through here, the Israeli 10-year government bond. That's doing actually dropping. And this is what I thought the U.S. bond market would do. So I thought we'd have really nice reprieve throughout the day, but the bond market's just staying steady right through here. We ran up to about 20, and then it just kind of stagnated from there. But if you look at a 2-day chart, well, this is a 2-day chart, nice little rally through there. So is this going to be the short-term top? I don't know. I'll be back tomorrow at the opening bell to let you know how this goes. I will have a closing bell video just to recap things for you. But I wanted to come in here and see if anybody had any questions for me in regards to what's going on and the whys behind it. So it's a head scratcher on how the markets are going so well with us bombing Iran and then Iran retaliating. But when it comes to mortgage rates, we have Fed officials coming in saying we might see rate cuts as early as July. And then if you go over to the July CME Fed Watch tool, let's go over to that. This actually tells us what the proposals are of what the Federal Reserve is going to do at their next meeting. So their next meeting's in 36 days. I'm not going out there to say, what they're going to do now. But if you go down through it, here's the probabilities of what they're going to do. And right over through here. So again, the federal funds rate that we currently are sitting at right now is 4.25 to 4.5. So there's a 77% chance they're not going to do anything in July. This was about 88 just last week, and now over here, now it's looking like there's over a 50% chance in the September meeting that they'll cut. So I'll be tuning in. All you need to do is tune in daily to me. Just watch the first 5 or 6 minutes of each morning's broadcast and each closing bell video, and you'll get a gist of where the market's going from here. So if you have any questions in regards to mortgages, I'd love to be able to help you out. If you have any if you're looking to buy your first house, please check out a $7,000 grant we have available for home buyers right now. You don't have to be just a first-time home buyer. So that's my video for today, guys, just to let you guys know who I am if you're not used to watching me. My name is Dan Frio. I'm actually a federally licensed mortgage loan officer. Yeah, I'm a loan guy. I work at a federal bank. That's how I'm licensed in all 52 states as well as Puerto Rico. But we do have a slogan here that's pretty catchy, I think. It's one application, one credit pool. We're going to shop your loan over 30 different lenders. So what do we do? How do we do that? Well, the unique thing about our federal bank is we're also a large broker. Okay, so think of it as a federal bank with 33 lenders on your side. So when you're reaching out to us right through here, when I'm giving you a quote, in the background, what I'm doing is I'm analyzing all these products for you. So there's 33 total lenders in our arsenal right now. So if you're out there trying to get the best rate in the market, at the lowest fees, check us out. Hopefully you can do that with us at the Frio team here. But if you're out there and you've already locked in and you can come out and say, Dan, can you check my rate quotes? I'm locked in now, but I know you work with 33 lenders. Can you get me a better rate, maybe with lower fees? Love to be able to help you. So reach out to me at therateupdate.com. You can ask me a question right through here. If you would, just click it. What you're going to do, all I ask you to do is put in some of your information on what you're looking for. If you have a rate lock or a loan estimate you want me to review, I'll just respond to this video, and I'll give you a secured link where you can log that into and load that up, and I'll do a video and get back with you as soon as I can on that. So if you don't have any questions for me today, folks, I want to conclude with that. The markets are okay. Stock market's up almost 400 points, and mortgage rates are also dropping at the same time, where Iran just bombed the U.S. into head scratcher why the markets are doing so well. So if no questions are out there, I will be back here in about an hour with my closing bell to let you know how all this mess ended for the day. Thanks for watching, guys. God bless. Have a fantastic evening, and I'll be back in about an hour with my closing bell video that will be recorded. But I'll be back again tomorrow to answer any questions that you guys might have. I'm going to start trying to do a live event each day just for a little bit to make sure if you guys have any questions.